And just as a reminder, we do Zoom trading all the time, Tuesdays, Wednesdays, Thursdays at 2 o'clock. Feel free to jump on board and I'll give you a refresher on all of this stuff and anything new, including some subtle ways to use the system that maybe sometimes we don't always talk about, even on the platform. All right, with that, Ashley, if you can unmute yourself, and we're looking forward to hearing what's going on in the markets.
You great. You bet, Paul. Can you hear me okay?
Ken.
A little louder.
Yeah, a little louder.
Let me see if I can turn it up. How's that?
A little better.
Okay, that's as good as it's going to get. So thanks, Joe, Paul, everybody for getting that new feature added. I now do not have to spend 10 minutes explaining to everybody. It'll be coming in the next few weeks. So I appreciate that. Also, I think I think we made the announcement 6 a.m. We're going to do the 6 a.m. CST Open also on Monday. So everybody on the East Coast can get stuff listed more appropriately with the time they're in the office. Lots of volatility this week in the market. As we know, we had a limit up and a limit down day in futures, and we have expanded limits on Monday. No limit on the front month. I know that's futures talk. Let's talk about the actual physical lumber. It's amazing. The thing that's different this time about the market, not only being extreme at extreme levels, we also have social media now, which we didn't have before. So everybody in real time can talk to each other and send out, bags of sawdust and talk about how this is the new gold and all that, which is a lot of fun. But we've got a lot of users now that want to talk about what does that mean to me in pieces, right? So a lot of the people that are getting on our platform now never bought as much in dollars per thousand. They look at per piece. So I did a little video this week. Obviously 2x4 8-footers, perfect example. Historically over time, they traded at like $2.50 a piece in US dollars. They're at $8 now a piece, right? So what does that mean to users? That would be like $3 eggs going to $10 or $4 a gallon milk when you walk into the store, all of a sudden seeing $14. So you can see as a consumer how that can be shocking in a way. The big trades so far on the platform this week, a lot of new users on the buy side and the sell side. More euro was selling this week, and more euro to end users that probably bought it in less traditional ways before, or more traditional ways, and they're giving us feedback like, wow, I didn't know I could have access to this type of wood right at my fingertips. The real highlight trades this week were OSB going from the Northeast all the way down to Florida multiple times and over to Tulsa, Oklahoma. If you think about that, OSB flowing back through about 3 different regions where it historically trades and going to different consumers that bought it within 200-mile distance are now buying it from 1,000 miles away. So that alludes a little bit to the article that Mike was quoted in Bloomberg saying, traditional buyers can now sell back against the grain into the market where they normally didn't have that ability to. So that's the highlighted trade. And I wanted to keep this short because I love listening to Stinson talk, and I'm kind of looking forward to that. So that's all that I have. Thanks, Paul.
All right, very good. Thanks, Ash. We appreciate that very much. So we're real pleased this morning to welcome Stinson Dean, who's the CEO of Deacon Lumber Company. Mike, are you there? I'm going to have you unmute and take it from here, please, and I'll unshare.
All right. Good morning, everyone. Super excited to have Stinson Dean here. And I want everyone to understand his business, because he is not what you would call a traditional wholesaler. He is really a financial trader. And the product that is the medium of his exchange is lumber. So with that, I'm going to introduce Stinson Dean. Good morning, Stinson.
Hey, thanks for having me on. I was getting a little nervous. You're going to give away the secret sauce there, Mike. So I appreciate you keeping that short.
I will keep all your secrets just between you and I, of course. So is that a proper description? You're really a financial trader?
I mean, I think that if you're familiar with kind of trading financial markets, I think that would make more sense. But, for our audience today, ultimately, I sell truckloads of physical lumber. How I do it, and I use futures aggressively, and I buy and hold, and I put lumber on the ground, in different parts of the country to mainly service fill-in truck needs and prompt truck deliveries. So that's my business model as far as like facing lumber dealers. Lumber dealers and jobbers are my main customer base. I don't sell home builders. I don't sell end users. But yeah, I think there's a financial trading aspect, or at least the mindset that I bring to my business that makes it a little bit different.
Now, who do you buy from? We know yourself too.
Yeah, I buy mainly from Canadian sawmills, U.S. sawmills in the Pacific Northwest, spruce product. I don't trade any Southern Yellow Pine at the moment.
And on Materials Exchange, you've shameless plug here. You've been a buyer and a seller.
Yeah, and that's kind of this idea of saying I'm a financial trader. That's how I look at this market. It's a liquidity provider, and I can be a buyer and a seller. When I buy, I have downside risk, and when I sell forward, I have upside risk. And something like the exchange has allowed me to view the market from a broader perspective and because we all have print, right? And I was just on a podcast the other day, and they were fascinated by the lumber market and how it all works. And they were really intrigued by the fact that there's basically one national price, and it's set in Prince George, British Columbia. And all the rail adders are fixed. So we all know, hey, if West Fraser's at 1330 this morning, if I'm in Atlanta, I'm adding $120. If I'm in Dallas, 110. If I'm in Baltimore, 100 plus. And with a live physical market exchange, it kind of breaks up that dynamic a little bit and allows you to see what I would call local basis, but local demand. And Ashley was saying you got OSB crisscrossing the country in what traditionally would be seen as an inefficient way to move wood, but we've never had visibility into local markets. And the platform's set, so we don't really know what that market is. It's all backed off to our picked up price. But it's fascinating to connect buyers across the country, because what that is doing is filling scarcity and supply pinches in particular parts of the country, which hasn't really been achievable, I don't think, up to this point.
So one thing you just talked about, and I think it's important to understand, is you operate your business without an ego. And this is an important factor. As a trader myself, ego just gets in the way. So the way I see this in you is that you will buy from anyone who provides you the best opportunity. You will sell to mostly anyone who provides you the best opportunity. So time and time again, we hear from people who are like, well, I buy direct from the mills. Well, that's fantastic. I think you should as much as you possibly can, if it makes sense. And I think you're a perfect example of you're operating a business, and the most important thing to you is your own profitability, which means buy the best you can from the most reliable sources you can, sell to the people or entities that will provide you the easiest type of transaction, and once again, allow you to operate your business efficiently. So I give you kudos for that.
Oh, yeah. Well, it's a commodity, so I don't really care where I get it from. It's somewhat the same. Lumber is a little bit more nuanced as per all your SKUs and everything you guys have on the screen. But at the end of the day, it's a commodity. So who cares where it comes from?
Absolutely. So let's just talk futures for a second and how it relates to your business. 99 or 100, let me say this again, of the people that talk about futures, about 3% of them actually trade futures, probably. I'm just pulling that number out. A lot of people talk about it and look at it. But
there's a really interesting study, I'll cut you off, and Random Links, this was like 5 years ago, they did a survey. How much of the industry watches futures? It was like 90%. How many of the industry uses futures? It was like 20 or less. Right. And I just thought that was hilarious to me, because we all if we're watching it, we're likely making decisions based off what's happening on the screen, but only a fraction of us are actually using them, which is a little bit backwards to me.
So, you know, we've actually done business together in the past. Just shed a little light on how you incorporate futures trading into your business.
It's risk management. So my primary risk is to the downside. I own lumber and I don't know who I'm going to sell it to. It's not pre-sold. I don't know where it's going to go. And more importantly, I don't know what price I'm going to be able to sell it at when I buy it. So I just have massive downside risk. So my business model is long cash, long physical rail cars, and short futures. And then I try to right now I have massive hedge losses, as you can imagine. But the cash price, especially in local markets, if you need it tomorrow, there's a premium price for that. I'm able to sell my lumber above and beyond my futures losses. And what that does for me in these types of markets is it allows me to have more wood than most, because who wants to buy $1,200 lumber and hope it goes to $1,300? Like, that's not a safe bet. Traditionally, it happened, but it's still risky to just go naked like that. So I hedge, and now I'm able to, futures are at 1330. I'm able to sell at 1375, and I make a modest profit. But I have a lot more wood than most, where if I was speculating, I would probably position size a little bit lower in case the market turned against me. So in markets like this, for me, I'm making a pretty standard margin on the way up, and I make a pretty standard margin on the way down. So the idea is my income or my margins are pretty smooth no matter what kind of market we're in. So that's how I use it. If I buy cash lumber, I immediately hedge it. There's a reason I bought it, because I like the hedge, the differential between those two numbers. And I'll take price risk for 90 days because we all know the dynamics from the sawmills. If I cut a PO today, they're not shipping till late May, early June, but I have price risk on today. So that's 6 weeks until it ships, and then another 3 to 4 weeks, depending on where I send it. So we're talking almost 3 months of price risk, which is significant and fairly rare. So it's a lot of fun and really volatile. But I use futures as strictly a risk management tool.
Perfect. And I can imagine that you probably frustrate some of your customers and some of the people you buy from, because you're willing to sell at a price, and right now they call back an hour later and you're like, I can't sell you there anymore. And
yeah. It can sometimes be a moving target, and I understand that my competition doesn't have a moving target as much, so I got to kind of eat that. Sometimes I might lift a hedge if I get bullish in the morning. So I kind of have a fixed price for the rest of the day that I can sell against, because what he's talking about is, as futures go up, I'm losing money on my hedge, so I got to raise my prices at least dollar for dollar to make up for the spike. So today futures are up 30 something bucks. Oh, cool. We're down.
Yeah, came back a little bit, yeah.
Sweet. So we're up 23 bucks. And I got to kind of adjust. And, so I honestly, Mike, I've learned I can't really hold my customers accountable, or I can't ask them to follow the futures market, because I do, and because I'm pegged to it. So I usually keep a pretty static price for most of the day, but they'll change the next day.
Absolutely. Okay. So that's great. I hope everyone has a better understanding of how you're operating your business. You're not a Blue Links, you're not a Boise Cascade, you're not a distribution center. You provide a service in the market for fast wood when you have it. And when you don't have it, you're not going to have it because it's just not advantageous for you.
Yeah. It's a fine line between a trader and a supplier. And I'm not a big company, and I specialize in 2x4s and 2x6s, ace through 20s and stud trims. And those are the most moved items and all of building materials. And if I run out, I got to say to myself, I'm not a big enough company to buy at the top just so I can have it. And I gotta manage my inventory. So ultimately, as I'm getting lower, my prices go up and up and up. So I still have something to offer. But every once in a while, I will run out, and it can be frustrating. But at the end of the day, I got to think about surviving these wild markets and being around next year. And if I buy inventory just to have it, I don't have cross-selling items like a typical distribution center to make up for any lumber losses. So I got to stay pretty tight.
All right, let's talk market. You specialize in the Texas market, Western spruce, mostly Texas. Delivered Dallas today. What will you sell me a truck of 2x4 16s for? Number 2 and better 16s.
If I delivered it to your yard in Dallas, it'd be pushing $1,600. I sold that yesterday. 1575 I sold yesterday, and prices are up today.
How about 2x6 number 3 12s?
If I had it, I haven't carried a 2x6 number 3 in a long time, because I haven't found a buy side liquidity that I could stock it and get rid of it.
Okay, 2x4 number 3 12s. How's that? There's a better.
Yeah, I those are pushing $1,300. So, that would be what, a $300 discount to number 2, which is significant, but not that makes a difference for folks. But
actually, let's touch on that for a second. I think it's really fascinating. As the prices have escalated, there was a historic spread between 2 and better and number 3.
Right.
What have you seen in the last 3 months, and what do you expect in the next 3 months? That's relationship.
Yeah, I think, and I'm going to go a little bit into a bigger thesis. I think now I'm beginning to theorize that there's just a lot less open market wood available. I think the big box retail increased their contracts significantly from last year. I have no proof or data. It just feels that way. You can imagine how short product they were last year. And that is like the worst thing a big box retail can do, is run out of wood, and specifically Lowe's running out of 2x4s. So my guess is they amped up their contracts, which reduces open market wood every morning that goes for sale on the sales floor from these Canadian mills. So because of that, 2x4 number 2, and we all know home center grade is the nicest looking appearance wood, has been bid up more and more because a lot of that production market share is not offered on the open market. I feel like, I don't know. So because of that, it has outpaced number 3 significantly. So there's historic spreads between the price of number 3 and the price of number 2. But no doubt, 2x4 number 3 will be dragged upward by number 2, but it seems to be lagging significantly because of the reasons I talked about number 2 being so short supplied. So I think that number 3 will close the gap, but until the general market normalizes, I think it'll be trading at these $300 discounts, which are historical discounts, but you can't really trade that necessarily. If you obviously, if you need number 3 and if you can use number 3 over number 2, it's a huge advantage. If you can talk to your customers about switching to number 3, if it meets code, maybe they're not used to it because they're a custom home builder and they don't like number 3 lumber the way it looks. You might explain to them the world's a little bit different now, and we can actually.
I've had the same discussion several times. In fact, on this call, where guys in the Upper East United States only use Doug fir. Well, maybe you ought to consider a different product because Doug Fir is running a premium. Let's talk spreads for a second. I'm fascinated. 2x4 16 truck load, $1,600, but futures is trading what 13.
We're back up, baby.
Oh, we're back up.
1356. Yeah.
All right, 1355. What is futures freight to Dallas?
120.
Okay, so 13, 14, it's like 1470. So if you bought a futures contract today and you sold it, you put it in, just run through unloading and all of that. Let's just say your total cost is 1480.
Sure.
You're getting 1600 for a truck of 16 footers. Now, this is a loaded question, of course. That futures car is not going to show up until June. If you
Right.
bought a car futures, right?
Yeah, and that's why this is the backwardation. Maybe it needs to go this way. In the markets, which is a fancy technical term for prompt wood, is carrying a massive premium. So you should expect if you're going to buy a prompt truck, you're going to pay significantly over replacement cost, which you will not see until, I mean, you won't see the wood until late June at this point if you call the mill today versus seeing the wood tomorrow. So there's a significant premium to getting the wood tomorrow versus paying a high price and getting it late June.
So let's talk about the price spread in futures, July to May. It is bid $131.40 today, right now. That says May is $131 more expensive than July shipment.
Right. And then and then put on a spot price to that spread.
Yeah, what is that? That's better. I was wondering, what is spot price? If Stinson Dean goes out to buy a random car of 2x4 West Fraser Canfor stock today, what are you paying?
Well, so this gets a little confusing. If you plotted on a x-axis time, we talked about it. If you need it on April 24th, you're going to pay $1,600. If you need it, the next available shipment is effectively the May futures contract, which is a May 15th ship theoretically. That's at 1350. West Fraser is a late June, so 2 weeks later. It's a little bit less. 1330 was yesterday. I don't know if they're on the market this morning. And then you start plotting the other futures contracts, which are cheaper and cheaper. So the further away in time you get, the cheaper the lumber is, because there's such a squeeze in the near term. It becomes, I don't care about the price. I need the product to fulfill my commitments to my customers. And so when I look at the price spread between the May contract and the July contract, like, who would buy the May when they can just buy the July for $130 less? Like, why would you do that? The answer is you don't have a choice. You have to buy the May because of the ship time. Like, you have to have the lumber. You're so short in your inventory, overcommitted. There's new business that came in. A little sidetrack, talking to builders, they withheld their POs for as long as they could. I think there's a big rush of POs for framing packages that caught some of these dealers off guard. That type of business doesn't put dealers in that big of a pinch because they can reprice at market and go from there. But it's just more wood that needs to get bought. So to me, it's just a real classic structure and a very beautiful example of how short supplied we are, where simply, if you could just wait 60 days, you'll get almost a 10% discount.
All
And
right,
the fact
let's
that
talk
it's not happening tells you how badly people need wood right now.
Let's put your crystal ball out, or pull your crystal ball out, right? Is July a good buy or not?
I don't know, man. I would buy even further deferred. If you're just like, hey, will I make money if I buy and the price go up, and just without any other kind of parameters around it. Traditionally if you're looking at any futures curve, yield curves, the oil curve, corn, the back end of curves are not as volatile. It's the front end. I think I'm backwards on the way these things come in. So the front end of the curve is where all the volatility is. And if the market wants to tank, okay, this back end will fall some, but the front end is where everything will fall apart. And so it's a safer buy on the back end, just purely because the volatility isn't as pronounced as the front end of the curve. And again, that's true for any kind of futures curve as things change. And I think the behavior that I'm seeing, we haven't seen in the 6 to 7 months we've been in this mess with $900 plus lumber. And what I'm seeing is people scrambling to buy what they need to cover today, but also trying to buy a little bit extra to cover themselves for the summer. And that type of behavior leads to market change, in my opinion. And again, I just don't have a huge view of the market. I can't confirm that confidently, but if that's the behavior, that's what it takes for markets to roll over, is people to get overbought. And traditionally in any commodity market, if you get burned, you overcompensate. So shame on me if I get burned again. And that overcompensation leads to a change in trend.
Yeah, it's interesting what you just said. And for markets to go down, it's not that people stop buying, it's that they don't need to buy anymore.
Right.
And I think we're experiencing right now, there was that pause, late February, March, where people stopped buying, but they still needed to buy.
Yeah, that's a great distinction.
So on that note, I'm gonna interrupt for a second. Yesterday on the Lumber Live call, we heard about projects being put on hold due to lumber pricing, and people pausing based on their projects on lumber pricing. Now, the question in the chat box here talks about, when do you see any dip in lumber prices? And, the bigger question is, if home building does slow down, if a correction occurs and home building does start to slow down a little bit, do the big boxes have the ability to cancel any of their contracts in response to that?
That's a great question, because contracts are great for the buy side. Contracts are great on the way up, and they are a mess on the way down. And it's a tough decision. And I don't know, I've never really been a part of one, so I don't know how easy it is to get in and out. I just got a price update, a prompt carload out of Canada, 2x4 8s through 16s, just under $1,600 delivered Dallas. Not quite 1,600.
Can I buy that truck of 2x4 16s?
Yeah, that's right. I am now retracting that number. And I'll get back to you.
So I want to ask one quick question, and then we're going to talk a little more market. Have you ever taken delivery of a futures contract?
I've been a part of one when I was a futures broker. The last stat I heard was in 2019. There have been 2 physical deliveries in 5 years, so it's super rare. And
Let me rephrase.
I was a part of one.
Have you XPit futures contracts?
Yeah.
Do you do that on a regular basis?
I wouldn't say on a regular basis. No, but I'm several. Every other contract, I'll have a handful.
Okay. I think that there's a lot of confusion around taking delivery of a futures contract and what the XPit means. I'm not a believer in it. I think you separate your futures hedging from your cash market transactions. But I know, a lot of people do that.
Yeah. So it's interesting because I used to work at FC Stone, which is called Stone X now. And they have a great lumber consulting desk. And that's where I cut my teeth and learned from the future side of the industry, and then got a splash of cold water when I got into the reality of cash trading. It's a little bit different than the theory of consulting. But EFPs are a little bit weird in lumber for sure. So I also used to trade corn, and EFPs are very common because both sides of almost every physical transaction have a futures position that they prefer to just offset with their cash counterparty. where in lumber, that's pretty rare, and it's effectively used towards the ends of the contract as an alternative mill if you're a buyer, and an alternative customer if you're a sawmill, a seller. So if your order file is not strong enough, you can sell the futures contract late in the expiration. And if you need coverage like we're seeing right now, like the fact that May it's bid $130 above July, to me, I think, I have no way to prove this, but I think it's dealer types just buying the May because it's going to ship quicker, theoretically, than the cash market. So EFPs typically are prearranged. You kind of know who your partner is.
Actually, we got to start winding down, I'm told here, and I want to hit a couple more things. If people want to talk to you about the futures and stuff.
EFPs are boring, so go for it.
Okay. Put yourself in the shoes of a lumber consumer right now. And you're sitting here and you've got, some money you could spend money on inventory, or you could just let the market play out. How would you play this market for the next 6 months? How about for the balance of 2021? And the second part of the question is, what is a black swan, something nobody sees that might affect it, that you're kind of keeping your eye on?
I think like a massive stock market correction could spill over into commodities and futures and drive everything down and kind of spook everyone. From a black swan perspective, going into the fall is going to be interesting. COVID, is it going to be seasonal? I'm fairly confident that it's not, and America doesn't have the stamina to go through something like that again. So I don't expect kind of shutdowns and a lot of caution, but I could be wrong, and we could have a seasonal COVID fall. I think that's really low possibility, but as we're thinking about things that could catch us off guard. So stock market sell-off kind of just spilling into everything. Something about COVID we don't understand. But outside of those factors, I continue to be bullish. I joke that if you want lumber prices to go down, you got to stop buying lumber. And the only reason people stop buying lumber is because home buyers will stop buying homes. And interest rates going up at the same time home prices have been going up is the recipe to cool this market off, which I want and I think we need. I just, the chances of a bubble or a crash in housing are so slim.
Correct.
There's such a massive bid demographically. So mortgage rates, which isn't a secret, but you just got to keep in mind, if we get back to 3.5%, 30-year mortgages, the last time we were there, home prices were literally 20% cheaper, but now we're 3.5% mortgages with 20% higher sticker price. So that payment is significantly higher. I
find that what interesting is the inelasticity in supply demand that this market's proven, but we will find that point where demand starts to wane. We will find that point where supply comes out of the woodwork somehow. We'll find that point.
And I know I'm long-winded, but the way our industry sells, we're buying wood for stuff that was committed weeks and months ago. So we're not, the wood that's happening right now is not representing future demand and home starts and things, right? Like we're in a squeeze because we have these commitments from Q1 we're trying to fill. So if things are slowing down as we speak, that does not mean lumber price is going to slow down as we speak too. It means July, September, that's when you see demand destruction and folks are selling 4 truckloads and buying 2 to replace it. And that's ultimately how it rolls over.
All right, last question. What does Stinson Dean see or Stinson Dean think that nobody else thinks? Like, where are you out on an island by yourself? Lumber, the economy?
Well, a few things. I think the Fed and the administration in Washington have radically changed the mandate from the Federal Reserve, and they're focused on the wages of the lowest earners and not headline unemployment, but full unemployment, which they've left vague. They literally, I think they just pretty much have dropped that inflation target of 2% to a lower priority. So they view inflation as good, and I'm not going to give my opinion on that. But that's the world we live in, and we need to be prepared for that. And we haven't had inflation for decades.
30 years.
Right. So
40 years.
it's like an experiment now. Like we haven't done it. The wealth inequality gap has done nothing but expand since the 80s. And there's studies when we had inflation, that gap closed. And we saw the capital gains kind of teaser yesterday of 43%, which would affect 0.03% of American taxpayers. And that's just a very different environment to live in. The Fed will not raise interest rates because prices are going up, because they feel like if they raise interest rates, people are going to lose their jobs. They rather have higher priced lumber, higher prices, inflation, than
Unemployment.
have people be unemployed. So that's their mandate.
Okay.
Yeah, I don't agree or disagree. I think I'm for more people being employed generally, but I think that's something we need to be used to. And I don't think it's a bubble, and I don't think it's going to blow up. So I think that makes me different. I'm not really scared of that mindset per se. It's the reality we need to set for. The last thing is risk transfer. I think dealers are going to stop offering 30, 60, 90-day pricing. I think that's out the door, and that risk is going to be put back on the home builders to manage how they're going to price, how they're going to buy. Are they going to start storing lumber? Are they going to start using futures? I think those price locks are going to go away because it's just been killer, as we've seen.
And I agree. I think the whole supply chain is going to change. Like we're seeing it already with loads on our platform moving against the traditional grain.
Right.
Stinson, thank you so much. If anyone wants to get in touch with you, you have a website, right?
I do very basic because I don't do a lot of marketing. It's just deaconlumber.com, and it's just like you can submit a little email to me, and I'll reach back out to you.
You're active on Twitter, I think is great. Follow you on Twitter. I saw a comment that someone on Twitter says you look like Paul Bunyan.
Yeah. Someone said this guy's definitely wielded an axe before. It's like, yeah.
Hopefully against the truth.
Yeah.
Hey, this has been awesome. We'll have you on again soon, and to kind of see how things panned out for some of these predictions.
I don't remember. I said a lot of stuff. I don't even remember what I predicted, but higher for longer. That's a summary.
Okay, Stinson, we've got it all recorded. We're going to hold you to everything you said. So thank you.
Lastly, we appreciate your support of our platform and of how we're changing this industry for the better. We know that it works for guys like you. And we're excited to be able to bring this digital market to the industry. So
yeah,
Paul, back to you.
All right, guys. Thank you very much. That was fascinating, and we appreciate that very much, Stinson. Thank you. Well, very good, everyone. It's been a great day. We've heard from Michael, of course. Remind you again that our conference will be announcing more information on that for a fall conference in Chicago. Remind you again about the new enhancements made to the system that will be live on the system starting 6 a.m. Central Time on Monday morning. Remind you again that we have training available Tuesdays, Wednesdays, and Thursdays, or reach out to Ashley or myself at any time on demand, and we'll walk you through some of these new changes on the system. Everyone, thank you for your support. Have a great weekend. We will see you next week. Bye-bye.